Hey guys, today we're going to be talking about a very basic breakdown of what is a short squeeze. Obviously, you guys have seen this on the news a lot. You've seen it with GameStop, but this stuff also happens with a lot of cryptocurrencies. We're going to get into it because this is very, very explosive. It's very exponential in the way it plays out. And you can really, really make a lot of money if you're early on these things, or you can get totally blown out if you manage to catch the top. So we're going to be talking a little bit about what constitutes the perfect setup for one of these things, and how to make sure that you're not caught on the wrong side of this trade, right? So here's a basic setup. So firstly, you've got a lot of large short positions. So how does a short work? Essentially what you're doing in cryptocurrencies are, if you're using a broker that allows you to short, which not all of them do, but Binance, for example, does. What you're doing is you are borrowing coins from Binance, instantly selling them on the market, and then promising to buy them back, to give them back to Binance, hopefully at a lower price so that you make that money, right? Because if you sold a coin for $10 and you buy it back for $8, you get to keep that $2 profit. So that's the general premise of a short squeeze. The key thing that I just told you is that when you close your position, you have to buy back shares. So what happens in a short squeeze? Well, very simply, if there's a large percentage of the float, so this is the current coins that are actively traded on the market, no cold wallets, no supply that is in dormant wallets, etc. We're talking about the float here. There's a very large percent of that that's being shorted. That poses an opportunity for a whale or a select group of investors, i.e. Reddit, to start buying up those coins, creating positive momentum. And what happens is the price starts to inch forward. Well, these short sellers, they start to bleed. Maybe they were using leverage. Maybe they were using debt. And guess what? They need to start covering their losses. They need to start closing their positions. And to do that, they need to buy back the coins that they sold, to give them back to Binance. And when they buy it back, that only adds even more pressure to the stock price, to the coin price, sorry. I'm used to talking about stocks here, but this is also relevant in crypto now because you can now short in crypto. For a very long time you couldn't, but now you can. And so when this happens, now you've got the short sellers that are buying back, and you've got even more positive momentum from people that are drawn into the price action, and you've got the original people buying. So that's when you get these large wicks upward like you see on screen, and it causes even more pain. And then the short sellers, and then they buy back, and then guess what? You reach the top when all the short sellers have capitulated and everybody's a goddamn buyer. And that's not where you want to be. So as far as advice, it should be pretty clear. If there's a large wick, there's a large candle, everybody's talking about buying, and everybody's a buyer, you can check the order book. Is everybody a buyer? Is everybody closing their position? Guess what? It's already too late. So don't get in. Don't FOMO. Well, that's essentially the setup for a short squeeze. I hope this was informative, very explosive, and I hope you guys catch one of these on the good side of this trade.